team that's behind Nakamoto is a lot of the key team that oversaw UTXO, which was the hedge fund under Bitcoin Inc. that actually was the best performing hedge fund in the world over a 5 or 6 year time frame. It really did amazingly, and at the last time I checked those numbers, and that was done through investing in first movers in international markets. So the UTXO team recognized the opportunity for treasury companies early. Metaplanet was the first investment that they did. So this was the team behind kind of part of the initial Metaplanet idea, as well as Smarter Web, Blockchain Group, and many others that did extremely well. And so the thesis there is that, again, there's a lot of capital trapped in international markets that can't easily buy Bitcoin or American assets. And so if you can launch a quality treasury company that's a first mover that provides an on-ramp for that capital, that's a very compelling offering. It's a very compelling idea. And Nakamoto, that's part of our key strategy, is we plan to invest a portion of our balance sheet in kind of international treasury companies and playing a key role. And that can take a lot of different forms, but for now, just let's just say that we plan to deploy our balance sheet in that thesis. So that's one thing we're doing that's different. It's very different. We plan to be more engaged and more active. And we also are looking at we have a core thesis on operating businesses, on synergizing with the Bitcoin treasury. So what businesses could you own or operate or acquire that actually create cash flow with the Bitcoin treasury or synergize with it? And that's a question we're very actively asking. So I think we are a team of operators from the Bitcoin industry. We're people that have been in the industry, that have operated Bitcoin businesses for quite a while. And we view Nakamoto kind of as both a direct kind of treasury company and treasury play and an expression of that thesis, but also a way of kind of pulling that all together and kind of synergizing it with where this industry is going to end up.
Interesting. And it sounds like you're still kind of figuring out how to decide which sectors or companies make sense to bring under that umbrella. Like, you don't have a formula for that yet. I mean, what you guys are doing is still very new. I don't want to say completely unprecedented, but it is new. So do you have an idea of what qualifies a company to kind of be brought in by you guys?
Yeah, so we're now in the domain of public company regulation. So it's not something we've disclosed to the market, and I can't talk about our criteria there yet.
Sure.
But it is something that obviously we would like to present to the market of how we're thinking about that and what our long-term capital strategy is, and how we would evaluate those criteria. It's something we're very actively engaged in, and that we look forward to sharing. So definitely a good question, and definitely something that we're putting thought into. And I think that's, again, it echoes this core point that, like, we want to build Nakamoto as an institution and a business that sits in the Bitcoin industry, that sits in the rise of this asset class and participates in many ways.
Yeah, I hear that. And, we've seen public market investors get really excited when traditional companies buy even a small amount of Bitcoin to put on their balance books. Do you think markets are ready to value a company primarily on its Bitcoin strategy, or are we just not there yet?
Well, I think they have with these companies in many regards. So I think all of the existing treasury companies are being valued almost entirely off their Bitcoin treasury and operations. But now, does the market how does the market feel about doing that? I think many people are deeply conflicted. And you get to this very interesting thing where in public markets, the focus is on your income statement, on your cash flow, and all valuation calculation is effectively downstream of the growth of your revenue and the growth of your income statement. current valuation models do not effectively like they really don't value balance sheet. They don't put a lot of value on like how robust is the balance sheet of this company. That balance sheet is certainly not getting a multiple or factoring in key ways. It might be kind of included at par. And so I think there's kind of this interesting question that treasury companies raise is that the right approach? Is that how we should value the balance sheet? What about companies that have a better balance sheet, that have proven that they have a better balance sheet over years, that are putting in effort, operations, and strategy to stewarding, growing, and capitalizing on the highest quality balance sheet possible, right? Like if you are delivering enterprise value by being a much more sophisticated balance sheet manager than another company that's just sticking $1 trillion in T-bills. Is that worth something besides the net present value? You could argue that you are providing value growth there. I mean, you are growing the value of the business. Somebody who invests their balance sheet that grows 20% a year is worth more than someone who grows their balance sheet 1% a year. I think disagreeing with that statement means you're putting orthodoxy ahead of substance. Meaning like this is just something, and a lot of people on Wall Street would disagree with that statement because it doesn't fit the contemporary valuation models. But I think it's flawed because value is value, and I don't really care where a business is making growing their value from, as long as they're doing it consistently and well. Like at the end of the day, if you want to give me a stock that goes up 50% a year from balance sheet operations versus from revenue growth, like I don't care, as long as you
Yeah.
can do that consistently. The pushback would be like, well, maybe it's more fragile, or like markets go up and down, balance sheet operations are different, but economies go up and down too, and like revenues contract all the time, and like products contract. So I don't think the market's there on this topic yet, but I think it is an interesting topic, that it's a question that's being posed by these businesses, is like, how do we value a balance sheet versus an income statement? And I honestly think like at this moment in capital markets, with the debt situation where it is, with fiscal spending where it is, and also with like potential AI disruption in a sense. What I mean there, I don't mean to
Right.
use that as a buzzword, but I mean to say, if we do actually get a scenario where there's a high level of disruption of many businesses because of AI, we could argue if that's going to happen or not. I think there's something kind of unique in Bitcoin as an asset in that scenario, and kind of having this store of value asset on your balance sheet that would benefit from net total growth without being vulnerable to sector by sector disruption. So that was a lot of things, but I mean, those are some of my thoughts there.
No, I understand. I appreciate you detailing that take for you. But you mentioned the word value a couple of times, which I'm glad you did, because critics will often say that Bitcoin companies are too dependent on price action. So my question would be, how does Nakamoto plan to prove its value in sideways or bearish markets?
Yeah. So I think for a treasury company, your value is the value you add via your operations and strategy, right? So it comes down
Mm-hmm.
to what are the actions you're taking that are specifically accretive, or that specifically deliver value for shareholders, right? And if you have cash flow that you can deploy in a bear market, if you have better financing terms, if you have capital partners that are willing to lend you money in a bear market, if you have an investment strategy for the balance sheet that outperforms, kind of the market, or Bitcoin or what have you. These are all ways that, like, through your operations and through what the team is actually doing, you deliver more value. And I think like that's how these companies should be looked at. It is not there is more to this than just say you're putting Bitcoin on your balance sheet and start selling equity. And that's certainly going to be where the market ends up, is that it's not enough to just do that. And you can see it like diverging performances, diverging MNAVs across constellations of treasury companies. Like it does matter what you're doing. And that is where the value is derived from. It's derived from strategy, operations, and execution.